What's going on, everybody? Today we're going to talk about Fusion and GASB 34. Let's not overcomplicate it. Let's get after it. Okay, so let's talk about some key considerations. Accounts payable can only send asset lines to our corporate book. Fixed assets corporate books can only be assigned to a primary ledger, which is key here. Tax books can be assigned to a secondary ledger or even a primary ledger. The ledger of the accounts payable line must be the same as the corporate book. Ledgers partition transactions for easy reporting, and that's what we're going to leverage in this story. Secondary ledgers converted at Subledger, but SLA only enabled for fixed assets. We don't want to combine everything into the same ledger. The secondary ledger is essentially an adjusting ledger. That's how we're going to leverage the story. The secondary ledger allows us to reuse the fund segment value, which is critical for reporting in combination. Retained earnings visibility is fully maintained at the fund level because we're using the same fund segment value. Let's talk about the approach comparison. There's two ways that I'm going to present that you can handle this. The first one I'm going to demonstrate in this video. The second one, the eliminations approach, I'm going to show in a separate video. So with regards to the secondary ledger tax book, the pros are that you have a standard trial balance, visibility by fund, and it's a reporting solution. The cons are, one, you need a tax book, you have a slightly convoluted process, and a slightly complex config. Not too much. The eliminations approach, which I'll get into detail when I cover that in the other video, you have a single ledger, it's a reporting solution, there's no tax book, slightly complex SLA, limited visibility by fund, and there's no standard trial balance. All right, let's talk about this tax book secondary ledger approach. You enter a transaction for a fixed asset in AP. It gets costed as an expense in the modified accrual ledger. It gets sent over to fixed assets, pushed into a corporate book. The corporate book pushes it over to a tax book, and the tax book pushes it over to a secondary ledger. Never pushes it over to the original primary ledger. All the costing, all the accumulated depreciation, and all the depreciation expense all occur in the secondary ledger. For reporting, we're going to take the modified accrual ledger, we're going to combine it with the GASB secondary ledger, and we're going to end up with GASB reporting. And I will show you a couple of different flavors of how to do this reporting. Now, by contrast, the sort of reverse eliminations approach takes the fixed asset that's booked to the primary ledger, and it's booked to the corporate book, but when we do the accounting for it, we don't book it to the actual fund, we book it to sort of this 9001 fund, which then we take those funds and combine them with the original funds through a reporting mechanism, and we end up with our GASB reporting that way. That will be presented in more detail in a separate video. And here in this slide, we show an example of that. We take the modified accrual, which are the standard funds, we add the 9,000 funds to it, and we end up with GASB reporting. So for the configs for the tax book / secondary ledger case, we're going to do a rapid COA ledger and orgs. We're going to add a secondary ledger. We're going to adjust the SLA options to consider only fixed assets. We're going to add a consolidation ledger just for kicks. We're going to do a COA mapping. We're going to config AP. We're going to config fixed assets, the books, the cats, the profile options, and then we're going to do some user maintenance in terms of getting the data access and the roles assigned. And here's the steps we're going to take. We'll add a supplier, we'll add an invoice for an asset, we'll run mass additions and prepare, we'll close the standard book, we'll transfer from the corporate book to the tax book, we'll create accounting, we'll close the corporate, we'll run depreciation, we'll create accounting for the GASB book, transfer to the ledger and the secondary ledger to the consolidation ledger, and run a trial balance as a check. And as an alternative, I will show you how to do this as a reporting method to simply run a report using SmartView. And while I won't cover this in this video, the configs for the eliminations case will be a rapid COA, ledgers, orgs, adjust the SLA options, config AP, config fixed assets, the books, the cats, the profile options, user maintenance, the data access, and the roles. And the steps for the elimination case will add a supplier, add an invoice for the asset, run mass additions and prepare, run depreciation, create accounting, and we'll create an eliminations report in SmartView. All right, first up, I'm going to spend the next approximately 5 minutes of this video, which is all accelerated video, essentially, putting our instance in condition such that we can run this demo. I'm going to, as you can see here, I'm going to add a user. I'm going to add my 5 standard roles to that user. Later, I will upload a whole slew of roles to the user. All of that's available in the next 5 minutes inside of this video. So I'm going to configure general ledger through rapid implementation. I'm going to configure AP. I'm going to configure fixed assets in such a way that allows us to run this particular GASB demo. There will be an additional secondary ledger added because that's not added by the rapid implementation. So all of this stuff is done essentially from scratch to demonstrate how it's not difficult to go from nothing to a full-blown GASB structure in a matter of probably, if you're slow, an hour. All of this is highly sped up. Now, the majority of that hour in terms of when I configure this is generally spent waiting for processes to complete, like doing the upload for the organizations takes about 20 minutes because of the create balances process. But anyway, so all of this section here can be skipped if you want, but it's here for proof of concept. It's here for proof of life to show that this whole story started from essentially nothing. That seemed to be absolutely insane as well. So I distilled this down into a process that gives a couple of flavors, as typical with Oracle. There's always 2 or 3 different ways to do things in Oracle. So I'm going to present to the folks 2 different ways. My preferred way is the consolidation method using a consolidation ledger because it presents a balance sheet, and essentially I don't know what the big deal is with folks out there with regards to adding another primary ledger or a ledger in general because they're free. So, and I don't know, I think if you go through the process to set up a ledger, you can have a ledger in under a minute. So there's a lot of freakiness out there with consultants when you mention the idea. It's like, well, you're going to need 2 ledgers or 3 ledgers. They freak out. So this particular approach has a primary, my preferred approach. The other approach I will present in a second video. But this one has a primary ledger with a secondary ledger in order to consume the fixed asset transactions. And then just to make life super simple, we port the transactions from the primary and the secondary to the consolidated so that we can run a trial balance. Now, you don't need to do that, and you'll see in this video that you don't need to do that because the first way that I show you in terms of getting your GASB 34 reporting is through a SmartView report. Now you can do it through a SmartView report, or you can do it through FRS, whatever. It's the same thing. At the end of the day, it's the same thing. You can do it through report. As we have been doing eliminations and consolidations through reporting for donkey's years. So all of this stuff is super simple. And the reason I put it together is because there seems to be so much confusion out there around GASB and so forth. So I attempt to make it simple. I am sure there are another couple of ways to skin this cat. I have a couple in my mind. I'm not going to present them in videos because I think they're superfluous, but essentially these 2 pretty much cover all that you need to cover. Now there's variances in terms of what you need to approach, but this will basically get you there. Now, if you took into consideration the Oracle approach, which they have their white paper out there, I think it was created in 2016, not updated since, is to create a secondary ledger that has full subledger accounting from all the modules. And so you'd end up with this primary ledger and a secondary ledger that are both chock full of transactions, when in fact that all we're really looking for from a GASB perspective is the delta that's created when you end up with a fixed assets, whether it be the asset amount, whether it be the accumulated depreciation itself. And you want to have a way to push things together which eliminate the expense version of this in modified accrual accounting for fund accounting, and so that you end up with this governmental accounting, this government-wide accounting that demonstrates a representation of fixed assets. So we turn off all of the other modules in this approach. The only thing that's getting pushed over is fixed assets. If you need journal entries, and those are aspects of this story that you need to enter, you can enter them into the secondary ledger, no problem. And so you can make all the adjustments you like that you may need to do, and the accountants know what they need to do. So they would just essentially do them in the in the secondary ledger in order to adjust and then combine these things together, whether it be through a consolidated approach as described, or through FRS, or through SmartView reports. All right, with the instance ready, let's get after this GASB exercise. All right, let's kick it off with setting up a supplier. And you will notice in this video and most of my other videos that my standard word for these demos is the word super. Super university, super supplier, super duper. Add a postal code. We'll do one in Virginia. Set the purpose, save that. Let's go over and add a contact. My favorite, Connie contact. Let's add an address to her. Save it. And now we'll go over and create a site with the address that we just created. Save it so we can detail it out. None of this stuff is required here, but it's just out of habit. Old habits die hard. And we'll auto create. Save it. Now I didn't have any locations, so I'm going to go and do a spreadsheet download so I can upload the locations through a spreadsheet. So I'm going to log into this one, and I have another one that has two addresses in it. The first thing we'll do in this one is we'll get a data set created, and then I'm going to unprotect it so I can copy and paste. And then I will not open that other spreadsheet, but I'm just going to copy the addresses in it, paste them, and upload them. And let that rip, refresh it to death until I see success. And that's my addresses. Refresh, in progress, and more refreshing, and success. And close that out. And we'll search them up just to make sure they're okay. A and B. Perfect. Now, just out of habit, I will go over to the org and assign it to the business unit. Super University. I'll save that, and I'm going to go back to the supplier, and just for being thorough, I'm going to assign these locations to the ship to and the bill to. And we'll save that out. Next up, we'll create a fiscal year that we'll use in our calendar. And this fiscal year is from July to June. Typical university or public, whatever. The calendar. Now again, keep in mind that the focus here is not on how to configure fixed assets or GL or payables. This exercise here is all about how to handle GASB. So the assumption is that you already are familiar with how to configure all of these modules. Okay, just bang all those out, save them, continue, a couple of fiscal years, 2025, save it and close it. Now this next item is setting the profile option, which is absolutely specific to GASB. So we'll go into the fixed assets profile options. We're going to search up GASB, and there it is. And generally you will set this at the site, but this is a vision site, so I'm going to assign it just to my user, to Bob. And yes, and you'll see later what this does, but this is critical in order to run the GASB features. All right, next up, we're going to create the corporate book. There'll be two books. So there'll be a tax book and a corporate book. I'm going to create the corporate book first. Again, this is all standard fixed asset setups. And there'll be one key difference in this particular book in that I will not activate the posting to the general ledger. And we'll see that in a minute. I'm going to give this the account defaults. And then I'm going to add the clearing account for all of this stuff because it doesn't really matter for this exercise. right? And you'll notice up here, I do not allow ledger posting for this book so that nothing gets posted to the corporate ledger. All right, next, we're going to need a secondary ledger. So I'm going to add a secondary ledger now, secondary to the SuperView US. It's all same chart of account, same currency, same accounting method, same everything. And that secondary ledger is at the subledger level. And here I'm setting the options, June 24th opening. I'll set the retained earnings. I will save it and close it. And I'm going to go over here and make sure that the process is run and they all succeeded, all good. All right, next up, I'm going to do a primary to secondary mapping. You'll notice here for the other, I'm turning it off. I'm setting it to no. I want none of the journals that are posted in the primary being copied down to the secondary. And here I'm just going to resubmit, submit accounting configuration, refresh, and assure that it succeeds, and we're all good. So now I'm going to go in and manage the Subledger accounting options for the secondary ledger so that the secondary ledger does not publish or populate from the subledgers, from payables, receivables, projects, whatever you can think of. The only thing that should be populating, so I just turned that off right there. Subledger accounting is disabled, and I just did that for payables, and now I'll do it for receivables. And so the only thing we want coming over to this ledger from a subledger perspective is fixed assets. We don't want to populate it with anything else, as it will create duplication. All of the primary stuff will get combined with the secondary, and it will all be nice and happy from there. All right, so there's just a couple of processes to run to update that, and they are updated. Now it's time to add the tax book, which is based off the corporate, so we'll give it a name. And the key takeaway here in this tax book is we are definitely going to allow ledger posting. I'm going to give it all the standard, like if this is the main book, okay? We choose the secondary ledger because we want to populate the secondary ledger, right? And you'll notice I'll tick all these off, just like if this was the main book, because it is at the end of the day. All we need the corporate book for is to copy down. So everything will get pushed there first. Once that's all done and finished, it'll get closed and everything will get pushed down into this tax book here and then moved over to the secondary ledger. Now here, we want to activate mass copy and allow CIP, okay? And all of that now is done. The secondary book, or sorry, the tax book is ready. That's posted to the secondary ledger. We are all set. Next up, I'm going to set up some prorate convention mid-month. I'm going to assign to the enterprise. I'm going to use the fiscal year name, the super, and then we'll detail this out for a bunch of years. And that'll do it. All right, so since this is a vision instance, the category's already been created. So we'll just use computer hardware, and I'll add the corporate book and the tax book. But first we'll add the corporate book. And you'll notice here on the asset clearing, it says 67101. That's critical. And I'm going to tell this not to depreciate in the corporate book. We don't need it to depreciate. I'm going to give it a straight line method, set the prorate, back, and save. Now let's add the tax book. In this particular case, we do want it to depreciate. Again, notice I'm going to enter 67101. You can't do that unless the profile option's been set for GASB. It won't let you. You have to put an asset, right? So let's add, notice depreciation is ticked. We're going to add straight line, prorate set, and we are in business for categories. Okay, so let's do some housekeeping for data access. I need to get Bob Adams some access for books. I need him to have access to general ledgers. I need him to have access to business units and so forth. So all of that's going to be set up here. I'm going to add data access for Bob so that he can open periods and do transactions and blah, blah, blah. Okay. but this is all, again, the books, the corporate books, the tax books, everything. All right, next up, now that we've have the data access, we can go in and open the period. So I'm going to open it up for the two ledgers, the primary and the secondary, and I'm going to open it up for payables. And all for June 24, so that we can transact in June 24. And now that that's all set, we're ready to go. So now that the period's open, I'm going to go ahead and enter a journal entry. I'm going to sort of do this cash retained earnings thing, but I'm going to do it in the primary ledger. And the main focus here is to show you that I'm going to make a journal entry in the primary ledger. I'm going to post it, and it is not going to get copied down to the secondary. This is critical. We don't want anything that's been journal entered in the primary pushed over to the secondary. If somebody needs to do a journal entry in the secondary, they can do a journal entry in that adjusting ledger as needed. But we do not want duplication, so we want to make sure, and here we'll do it. So we'll search this out, and you can see it's processing. So we'll see that we do have a journal in the primary, and I'm going to change this over to the secondary, and we're going to search the same criteria and no journal. And that's exactly what we want. And that was made possible by the primary to secondary mapping. All right, time to add an invoice. Got ourselves a fixed asset. The key story here is we're going to book this fixed asset to an expense account because it is expensed inside of the modified accrual or the fund accounting corporate book. So we're going to book it to an expense account. Book this in June 22,000. Let's add a line. Let's put the amount. Notice the distribution, 67,101, which is miscellaneous. Now, this would be more detailed in a real world scenario, but I just want to book it to an expense account. Validate it, and we're going to post that to the ledger. There's the accounting, book to accounts payable, and to the expense account. Let's go over to the journal, super, and we're going to find there is our journal from accounts payable for 22,000. It's expensed, as it should be. All right, let's change it over to the GASB. And here, because we deactivated it, we're not going to have any transaction coming over from the subledger. All right, just a quick look at the fixed assets and the books. And I just want to show you there's no action here. There's no action for the corporate book, and there's also no action for the GASB book because we're going to process it now. We're going to bring it over from accounts payable through mass additions. Now let's run mass additions. Now there's three things we have to set. We have to set the update of the tracking, and we do that. We put in the dates and so forth in the ledger. But then we also set the filter. And the filter in this particular case, since we booked it to 6701, we're going to filter for 6701. Now we're going to choose the book and the counting date. And then the third piece is back to the filtering again, where we update the asset type. We put in the ledger, we put in the book, we set the filter again for account 67101, and we're set. And we kick off with submit. And we'll quickly refresh a bunch of times and make sure that the process completes as succeeded, and it does. So we'll take a quick look at the report, and you'll see we have an asset added for 22,000, right? Let's go back to fixed assets, and we will find our fixed asset in incomplete and ready to be prepared. Depreciation expense is already there. We need to add a location. There's USA, Florida, Miami, building 1. Say okay. Let's first give this a tag number after we save it. Tag number 1001, and put it into post. All right, now we can see the asset. So let's go over to the ready to post group, post all. And now we'll go over to the processes and we'll refresh, and we'll get this thing to complete, showing as succeeded sum. And we'll look at the report. And the report's going to show a fixed asset added for 22,000. Now let's go back to assets and let's query up the asset using the tag number 1001 and the book. And there it is. So here's all the standard details. Again, this is all standard fixed asset stuff. So there it is. Let's do create accounting. Let's do it in final and run that, get that to complete. So this is going to run in final for the corporate book, which all of you should be aware at this point that it's never going to get sent over to the ledger, which is exactly what we want. We don't want it to go to the primary ledger. So we'll run that and we'll get the create accounting report, and it'll show that there are no errors and we have a $22,000 entry, etc., etc. So now we'll go over to the general ledger. We'll go to the corporate ledger, the primary, and you'll notice the original entries are there, but there's no entry for the fixed asset. However, if we go back to fixed assets, we will see, if we review journal entries, we'll see the journal entry locally that was created when we ran it. And there's the entry. Okay, the 67101, the 15, all the entries are correct. They just don't go over to the primary ledger. Okay, and we can look at all the details. Let's go into here and we will get to the ledger attributes, and you'll see not transferable because we set it not to. All right, now what we'll do is we'll calculate depreciation. You have to calculate depreciation to close the book, but we're going to calculate it and then go look at the asset to show that it's actually not being calculated as we instructed in the category. So let's bring it up and you'll notice 0 zeros across shows as depreciated, but it's all zeros. Okay, there's the whole assets right there. Now let's close the period for the corporate book. It's the only way we can transfer down. All right. We'll let the processes run. We'll come back and we'll notice that the corporate is now in July of 25. So now let's go over to the journals, and I want to reprove that there's still only 2 journal entries. And there's nothing, of course, over for the secondary ledger. So let's go back to fixed assets. Now let's change the book over to the GASB book. We're still in June, and we need to copy over from the corporate. Let's let that process run. Okay, and it shows 1 was processed as we expected. And now let's go back to fixed assets and let's query up the asset, and we'll start seeing the details for both. Okay. No depreciation for the GASB, right? But let's go over create accounting. Let's do it in draft for this particular run so we can just take a quick look at it, and we'll monitor the processes and get the report, the execution report, and ready. Okay, so let's go take a look at that, and we'll see we have no errors and we have a fixed asset in the GASB book. Let's go back to fixed assets. Let's calculate depreciation. So let's let this process finish. It's finished. Let's go back to the asset. And what we're going to do is we're going to bring the asset back up, and we're going to see depreciation for the GASB book at 183 and zeros for the non-GASB. So now let's go over and account for this whole thing on final. Let's send this fully over to the ledger. This is the secondary ledger that's going to be hit. It's set to be hit. And so we expect that the child journal process kicks off. And let's look at the report. I'm just going to bring it up bigger this time. And there it is. We have the journals for the asset and the journal for the depreciation. So let's go over to the journals. Let's go into the corporate. Make sure we only have 2 journals, the original journals for that. Let's go over to the GASB, and we have a journal for the asset and we have a journal for the depreciation. There's the asset and there's the depreciation in the secondary ledger. So all good. So now that we have records, let's go over to SmartView, and I'm going to show you how through SmartView that we can do the reporting for GASB. So I'm going to bring up this spreadsheet. I pre-established it. I've got the two ledgers. I've got the Super U on the left. I've got the Super U GASB on the right, the secondary. And when I combine these two together, right, so let me show you the ledger, Super US in the one line. So there you go. And then I just do this combine, and I'm basically summing them from left to right. And the combined is actually now the GASB, because that is all the original transactions that would be in the Super U corporate with the GASB combined for the consolidation. And we end up with full combined GASB reporting. And here's all the different accounts. So the fixed assets is moved over. Wasn't there in the original. The 22,000 is moved over in the liabilities. The 100,000 retained earnings in cash. And then the miscellaneous expense is wiped out because it's not an expense in the GASB. So as promised, I said I would show you how to do this through the consolidation method using a couple of ledgers. So the first thing I'm going to do is I'm going to create a chart of accounts mapping so that I can push transactions from the various ledgers into a consolidation ledger. So I'm going to create the mapping first. The chart of accounts is the same. Super simple. It's just copy from source, the segment, save it, done. Okay, now we have that. So let's go over and create the primary ledger for the GASB consolidated. Same chart of accounts, same calendar, same currency, same everything, folks. Everything stays the same. Save and close. Let's go into the specify the ledger options for that new ledger. Search it up. There it is. And let's set the period to June 24, the language, and the retained earnings. So the ledger is now set up and ready to go. And now we'll submit the accounting configuration process. We'll go back over to monitor it. We'll see that it completes. Make sure everything is just fine. Could run pretty quickly, and it is ready to go. So now we're going to go back to users to add access for Bob to this new ledger. Okay. And now he has access for the general ledger. Let's open the first period, June 24. Save that. Let's go monitor and make sure it's opened. And now we are going to transfer the balances from the Super U to the GASB consolidation. So we're going to take Super U first, and then we'll do the GASB second, right? And this will move all straight across into this new ledger. Submit it. Okay. Now let's do it again. And this time we're going to do it from the GASB secondary ledger over to the consolidated, submit it, and we'll make sure the process completes and it's all good. And now let's go over and take a look at the journals in our new fancy consolidated ledger. I have two journals, one for each. So now we're going to kick off another process, and we're going to run a trial balance. But we're going to run the trial balance nicely for the consolidated ledger, and it's going to combine all that stuff together. It will automatically, by definition, based on the transactions that have occurred, it will have a full-blown GASB trial balance, because it's going to wipe out the expense that was originated, and it's going to move everything else across. So the expense gets moved out, and of course the fixed assets are in the ledger, so we're all good. And so that's going to do it. Just to recap, we showed that we entered a transaction accounts payable. That got pushed over to the primary ledger, which is the fund accounting or modified accrual ledger. Then we had it pushed down into fixed assets, right into the corporate book. We processed the corporate book. We pushed that down in the tax book, and the tax book sent over the transaction to the secondary ledger, creating the asset representations in the secondary level. Then I demonstrated two different ways that you could do the reporting. There's more, But straightforward, we went through SmartView, which is basically taking Ledger A and Ledger B, and that's why we end up using Ledger, so that we can partition this. As it's stated in the beginning, you can partition through ledgers, and that's what we did there. And the second approach was, if you like, you can create a consolidation ledger, push Ledger A and push Ledger B both into the consolidation ledger. And if you want to be able to run a trial balance, bing, bam, boom, you got it right there. You got a full-blown trial balance. So I hope you enjoyed the video, and I still have the, what do you call it? The SLA approach that uses a single ledger, single primary ledger, single corporate book, and that'll be coming out soon. So that's going to do it for this one, folks. If you found the information useful, why not consider using the subscribe button like a bookmark, so you can have easy access to the information without having to search for it when you need it. I really hope you enjoyed your visit today, and I will catch you in the next one.